After a challenging year for investors in 2022, many may be wondering how to approach the uncertainty of 2023. And who better to turn to for investment advice than Warren Buffett, the Oracle of Omaha? Buffett and his company, Berkshire Hathaway, have achieved remarkable success in the stock market, so when he offers advice, investors should pay attention. Here are some valuable tips from Buffett to guide you through the coming year.
How do you find intrinsic value in a company?
Well, intrinsic value is the number that if you were all-knowing about the future and could predict all the cash that a business would give you between now and Judgment Day, discounted at the proper discount rate, that number is what the intrinsic value of a business is. In other words, the only reason for making an investment and laying out money now is to get more money later on, right? That's what investing is all about. Now, when you look at a stock, when you look at a bond, assuming it's the United States government bond, it's very easy to tell how much you're going to get back. It says it right on the bond. It says when you get the interest payments, it says when you get the principal. So it's very easy to figure out the value of a bond. It can change tomorrow if interest rates change, but the cash flows are printed on the bond. The cash flows aren't printed on a stock certificate. That's the job of the analyst, is to print out, change that stock certificate, which represents an interest in the business, and change that into a bond and say, this is what I think it's going to pay out in the future. When we buy, some new machine for Shaw to make carpet, that's what we're thinking about, obviously, and you all learn that in business school. But it's the same thing for a big business. If you buy Coca-Cola today, the company is selling for about $110 to $15 billion in the market. The question is, if you had 110 or 15 billion, you wouldn't be listening to me, but I'd be listening to you incidentally. But the question is, would you lay it out today to get what the Coca-Cola company is going to deliver to you over the next 200 or 300 years? The discount rate doesn't make much difference as you get further out. And that is a question of how much cash they're going to give you. It isn't a question of, it isn't a question about how many analysts are going to recommend it or what the volume in the stock is or what the chart looks like or anything. It's a question of how much cash it's going to give you. That's the only reason. It's true if you're buying a farm. It's true if you're buying an apartment house. Any financial asset. Oil in the ground, you're laying out cash now to get more cash back later on. And the question is how much are you going to get, when are you going to get it, and how sure are you? And when I calculate intrinsic value of a business, when we buy businesses, and whether we're buying all of a business or a little piece of a business, I always think we're buying the whole business because that's my approach to it. I look at it and say, what will come out of this business and when? And what you really like, of course, is them to be able to use the money they earn and earn higher returns on it as you go along. I mean, Berkshire has never distributed anything to its shareholders, but its ability to distribute goes up as the value of the businesses we own increases. We can compound it internally, but the real question is, Berkshire selling for, we'll say, 105 or so billion now. What can we distribute from that if you're going to buy the whole company for 105 billion now, can we distribute enough cash to you soon enough to make it sensible at present interest rates to lay out that cash now? And that's what it gets down to. And if you can't answer that question, you can't buy the stock.
Firstly, focus on finding undervalued stocks. Buffett is known for being a value investor who looks for stocks that are priced below their intrinsic value. As a result of the bear market we experienced in 2022, there are likely to be many undervalued stocks in the market. Even great companies like Google may have overcorrected and could be trading well below their intrinsic value. Therefore, investors should keep an eye out for companies with solid fundamentals that are currently trading at a discount. Secondly, investors should look for sustainable dividends. Buffett has always favored companies with stable earnings, a strong balance sheet, and a safe and growing dividend. Investors should ensure that a company's dividend is sustainable and not stagnant. While dividend yields are currently high due to the market's recent downturn, investors should not be swayed by a high yield alone. Instead, they should look for companies with a good track record of paying dividends and solid long-term potential. Thirdly, stay disciplined and avoid emotional decisions. Buffett is known for his ability to stay disciplined and avoid making emotional investment decisions. During times of uncertainty and market volatility, it's important to stick to a sound investment strategy and avoid reacting to short-term market movements. A well-thought-out investment plan that aligns with your long-term goals can help you stay disciplined and avoid making costly mistakes. Don't try to time the market. Buffett has repeatedly warned against trying to time the market, saying, "The stock market is a device for transferring money from the impatient to the patient." Trying to time the market can be incredibly risky, as it's impossible to predict short-term market movements with any degree of accuracy. Instead of trying to time the market, focus on building a well-diversified portfolio of quality investments that can weather market volatility over time. Be patient. Finally, patience is key to successful investing. Buffett has famously said that his favorite holding period is forever, and he's known for holding on to quality investments for the long term. Don't be swayed by short-term market movements or the latest investment fads. Instead, focus on building a diversified portfolio of quality investments that can deliver steady, long-term growth over time. Finally, when in doubt, consider investing in an S&P 500 index fund. The S&P 500 is the most popular stock market index, tracking the largest 500 public U.S. companies by market capitalization. Buffett himself has recommended investing in the S&P 500 index fund for a long time. One of its key advantages is its diversification across multiple sectors, which can help reduce risk and ensure portfolio success is not overly dependent on a few stocks or industries. While past performance is not a guarantee of future returns, historically, the S&P 500 has provided strong returns over the long term. In conclusion, by following these tips from Warren Buffett, investors can navigate the uncertainty of 2023 with greater confidence and potentially achieve success in the stock market. However, it's always important to conduct thorough research and seek professional advice before making any investment decisions.
Thank you for watching Invest Avenue. Before I go, I want to remind you that if you're interested in implementing Warren Buffett's investing principles,
a great place to start is by opening an account with Interactive Brokers. They offer low fees, advanced trading tools, and a wide range of investment options to help you build a diversified portfolio that aligns with your financial goals. Plus, if you use my referral link in the description below, you can get a special bonus when you open your account. So what are you waiting for? Click the link and start investing with Interactive Brokers today. Thanks again for watching Invest Avenue, and happy investing.